Welcome, financial enthusiasts. Today, we're diving into the world of exchange-traded funds, or ETFs, with a focus on three standout U.S. options for 2024 and beyond. ETFs are a type of investment fund and exchange-traded product, traded on stock exchanges, much like individual stocks. They offer a simple and effective way to diversify your investment portfolio, spreading your risk across a range of assets instead of placing all your eggs in one basket. And with diversification, you're better positioned to weather the ups and downs of the market. Today, we're going to spotlight three ETFs that stand out for their strong performance potential and strategic attributes. First up, we have the Vanguard Large Cap ETF, known as VV, celebrated for its low fees and sensible process. Next, we'll explore the Avantis International Equity ETF, or AVD, which focuses on foreign developed stocks with attractive attributes. And lastly, we'll delve into the PIMCO Active Bond ETF, or BOND, an active bond ETF managed by experienced professionals aimed at providing better yields while effectively managing risk. So, are you ready to explore these promising ETFs? Buckle up and let's get started. First up, we have the Vanguard Large Cap ETF, also known as VV. This exchange-traded fund is a popular choice among investors, and for good reason. VV is known for its low fees, a characteristic that can significantly contribute to an investor's overall returns over the long term. Keeping costs low is a key component of successful investing, and VV makes it easy with its competitive expense ratio. But the appeal of VV extends far beyond its cost efficiency. This ETF adheres to the CRSP US Large Cap Index, a market cap-weighted index designed to measure the performance of the largest US companies. By tracking this index, VV provides investors with exposure to a diverse range of large-cap stocks, spanning a variety of sectors and industries. Now you might be wondering, why invest in large-cap stocks? Well, these companies, often industry leaders, have a history of stability and consistent returns. They are typically more resilient during economic downturns, often continuing to pay dividends even in challenging market conditions. Investing in large-cap stocks can be a smart strategy for those looking for a balance of growth and stability in their portfolio. VV's portfolio is composed of some of the biggest names in the corporate world. Think of companies that are household names, with products and services that are used daily by millions of people. These companies have established business models, strong brand recognition, and often a global presence. They are the kind of companies that can weather economic storms and come out stronger on the other side. However, as with any investment, it's important to consider your individual financial goals and risk tolerance before diving in. While VV offers the potential for steady returns, it may not offer the high growth potential of smaller, more volatile stocks. But for those looking for a relatively stable way to participate in the stock market, VV can be a solid choice. In conclusion, the Vanguard Large Cap ETF, VV, distinguishes itself in the ETF marketplace with its low fees and broad exposure to large-cap U.S. stocks. By tracking the CRSP US Large Cap Index, it offers investors the opportunity to invest in a diverse range of industry-leading companies. With its low fees and stable returns, VV is an attractive option for those looking to add some large-cap exposure to their portfolio. Next on our list is the Avantis International Equity ETF, or AVD. This fund is a fascinating one as it takes a unique approach by focusing on foreign developed stocks, but not just any foreign stocks. AVD specifically targets those with low price-to-book ratios, which is essentially a measure of a company's market value compared to its book value. In simpler terms, it's a way to identify companies that may be undervalued by the market. Now, why is this significant? Well, investing in undervalued stocks can often lead to high returns, as these stocks have the potential to increase in value significantly when the market corrects this underpricing. It's like finding a diamond in the rough, and AVDE is particularly good at it. But there's more to AVD's strategy. The fund also focuses on stocks with high profitability. This is crucial because companies that are profitable are more likely to provide a return on your investment. They have a proven track record of generating income, which is often a good sign for future performance. Now let's talk about international diversification. This is a key aspect of AVD's strategy and an important consideration for any investor. By investing in international stocks, you're spreading your investments across different countries and economies. This can help to reduce risk, as you're not putting all your eggs in one basket. If one country or region experiences an economic downturn, your other investments can help to offset any losses. International diversification also provides the opportunity to take advantage of growth in emerging markets. These markets can often offer higher returns than more established markets, as they have the potential for rapid economic development. So, by investing in a fund like AVD, you can gain exposure to these exciting opportunities. But what really sets AVD apart is its cost effectiveness. The fund offers a low-cost way to access international markets, making it an attractive option for investors who want to diversify their portfolio without incurring high costs. It's a testament to the fund's commitment to delivering value to its investors. In summary, AVD offers a unique investment strategy that focuses on undervalued, profitable stocks in developed international markets. It provides a cost-effective way to diversify your portfolio and potentially enjoy high returns. If you're seeking international exposure and a cost-effective option, AVD might just be the ETF for you. Last but definitely not least, we have the PIMCO Active Bond ETF, known as Bond. This is no ordinary bond ETF. What sets Bond apart is its active management. It's not just a passive fund that tracks a bond index. No, Bond is managed by a team of seasoned professionals who actively work to outperform the broad bond market. What does this mean for you? It means that Bond has the potential to provide better yields than your average bond ETF. The team at PIMCO doesn't just sit back and let the market dictate the returns. They're in the driver's seat, making strategic decisions to generate higher returns. This active approach is what sets Bond apart from many other bond ETFs out there. But what about risk? After all, higher returns often come with higher risk, right? Well, that's where the experienced team at PIMCO comes in. They're not just about chasing high returns, they're also focused on effectively managing risk. They do this by carefully selecting the bonds that go into the ETF, taking into account factors like the creditworthiness of the issuer and the maturity of the bond. So, while they strive for higher yields, they're also mindful of ensuring the risk is well managed. Bond strategy is not just about buying and holding bonds either. The team at PIMCO is constantly analyzing the market, assessing economic conditions, and making adjustments to the ETF's holdings as needed. This active management approach allows them to respond to changes in the market quickly, potentially protecting the ETF from sudden downturns and taking advantage of opportunities for growth. So, if you're looking for an ETF that offers the potential for higher yields, coupled with effective risk management, Bond could be a good fit. Whether you're a seasoned investor or just starting out, Bond offers a unique approach to investing in bonds. It's not just about tracking an index. It's about actively working to outperform the market and manage risk effectively. For those looking for a bond ETF that strives for higher yields and effective risk management, Bond is a compelling choice. And there you have it. 3 great US ETFs for 2024 and beyond. Let's quickly revisit the key takeaways. The Vanguard Large Cap ETF, known as VV, stands out for its low fees and focus on the CRSP US Large Cap Index. This ETF is a sensible choice for those looking to invest in large cap stocks. Next, we have the Avantis International Equity ETF, or AVDE. This ETF offers exposure to foreign developed stocks with low price-to-book ratios and high profitability, making it a cost-effective option for those seeking international diversification. Lastly, we explored the PIMCO Active Bond ETF, simply called Bond. This active bond ETF, managed by seasoned professionals, aims to provide better yields than the broad bond market, all while effectively managing risk. Remember, every investment carries risk, and it's essential to do your own research and consider your financial goals before choosing an ETF. Thanks for joining us today. Please hit that like button, and if you aren't subscribed, hit that button also. Have a great day, and we'll see you in the next video.